Welcome to The Explainer. Today we are diving into the story of a guy who took what was basically a few $100s and turned it into a multi-billion-dollar empire. They called him India's Warren Buffett, the Big Bull. His name? Rakesh Jhunjhunwala.
Just take a look at this number. 54,524 crore rupees. I mean, that is just a staggering amount of money. And this was the value of Rakesh Jhunjhunwala's public stock portfolio around the time of his passing. An absolutely immense fortune. And here's the kicker. He built it from the ground up.
So, that's the real question, isn't it? How on earth do you turn just 5,000 rupees into that? This wasn't a lottery ticket, folks. It was a strategy, a playbook. And that's exactly what we're going to do today. We are going to break down the playbook of the one and only India's Big Bull.
All right, so how did he pull it off? Before we jump into the how, the actual methods, I think it's super important to understand the man himself and just how massive his influence really was on India's entire investing world.
You see, he wasn't just some other successful investor. The guy was a total icon. He started out as a chartered accountant, and his story, going from a regular middle-class background all the way to the top of Dalal Street, which is basically India's Wall Street. That journey inspired millions and millions of people.
All right, let's rewind and get to the origin story. Because this whole empire, this massive fortune, it all started from something incredibly small. Almost hard to believe, really.
So this timeline, it's not just his story. It's really the story of modern India's economy. He kicks things off in '85, lands his first huge profit in the '80s, and then, boom, he perfectly rides this massive wave of India's economic liberalization in the '90s. And the 2000s? That's when he really built those legendary positions that we all know him for today.
I just want to pause on this for a second. 5,000 rupees. That's it. That's what he had to start with back in 1985. And this might be the single most important part of his entire story, because it just goes to show you the amount of money you start with, it's nowhere near as important as your discipline and your patience.
Okay, so what was the secret sauce, right? What was the magic formula? Well, it wasn't some crazy algorithm or some hidden inside scoop. Nope. It was a really clear, super disciplined, and repeatable set of rules. His personal investment code. Seriously, if you only take away one thing today, make it this quote. Buy right, sit tight. It sounds simple, I know, but this wasn't just some catchy slogan for him. It was the absolute foundation of his entire philosophy. It's all about doing your homework, finding a fantastic business, and then just having the patience to sit back and let it do its thing.
And what's so cool here is how these four ideas all work together, right? They support each other. Think about it. You can't really have conviction if you don't understand the business fundamentals. And there's no way you can hold a stock for years if you don't have the emotional discipline to just tune out all the daily market drama. It's a whole system.
And he didn't stop there. He built even more on top of that foundation. For one, he was famously, and I mean famously, optimistic about India's future. He wasn't just picking stocks, he was making a massive bet on the country's growth. But at the same time, he was adaptable. He was always open to new industries, as long as they passed his strict tests on business quality.
All right, but talk is cheap, isn't it? So let's get into the good stuff. Let's see how this investment code actually played out in the real world, with the actual decisions that made him a billionaire. Okay, now this chart just perfectly shows you what we mean by a high-conviction approach. Just look at these numbers from 2022. A full third of his money was in jewelry, almost another quarter in insurance. These weren't just random picks. No, they were direct bets on a growing, spending India. He wasn't about spreading his money thinly across tons of stocks. He was all about putting big money behind his absolute best ideas.
And here they are, the actual companies behind those big sector bets. We're not talking about some obscure, risky penny stocks here. These are the big players, the dominant companies in their fields. And right there, at the very top, you see it, the crown jewel. His most famous, most legendary, and most profitable investment of all time.
Oh yeah, the Titan investment. Look, the story of Rakesh Jhunjhunwala and Titan Company is basically a masterclass in his whole buy right, sit tight philosophy. It is the perfect case study. Everything we've talked about, it's all right here.
So here's the key thing to understand. He didn't just look at Titan and see a company that makes watches and jewelry. No way. He saw something much bigger. He saw a bet on the dreams and aspirations of 1 billion people. He saw India's middle class growing and wanting to buy from brands they could trust. So what did he do? He found this huge long-term trend, picked the absolute best company to benefit from it, and then he sat tight. For years.
And the results of this strategy? Well, the proof is in the pudding, right? In fiscal year 24, his portfolio was up 11%. That's almost double what the main Indian stock market indices, the Nifty 50 and the Sensex, did in the same period. That's not luck, people. That is the direct result of a super-focused, high-conviction strategy.
Okay, so we've looked at the man, his code, and his portfolio. The big question is, what can we, you and I, as investors today, what can we actually learn from this incredible journey?
So here it is. This is your takeaway playbook. First, start small but think big. Remember, compounding is where the real magic happens. Second, you're picking businesses, not just stock tickers. You have to understand what you own. Third, have conviction. It's better to concentrate on your best ideas than to diversify into mediocrity. Fourth, patience is your superpower. Time in the market will always be timing the market. And finally, find those big waves, those industries with huge growth ahead, and just ride those tailwinds.
You know, when you boil it all down, it really just comes down to mindset. It's two different ways of thinking. On one side, you've got the Jhunjhunwala way. You think like a business owner, you focus on what the business is actually worth, and you see a market crash as a great sale. On the other side, well, that's the trap so many people fall into. They trade on hype, they get scared, they get greedy. All his success came because he lived and breathed everything in that first column.
And this brings us to one last really important thought. For all this talk about patience and fundamentals, let's not forget, the man was a huge risk taker. But, and this is the important part, his risks were never just blind gambles. They were smart, calculated bets backed by tons of research and total conviction. And this quote from him is the perfect reminder that real growth, whether it's in the market or just in life, it doesn't come from playing it safe. It comes from taking smart, informed risks.